Good afternoon. It is January the 29th, end of the week, end of the month, and the market traded up. The rally today was attributed to the Bank of Japan's interest rate cut. It's also the end of the month, window dressing, etc., and there's not a lot of incentive for stock players to be sellers at the end of an accounting period because of their compensation. So we actually came to the market today thinking short. Resistance at 19. We thought we could get up and retest 1900, 1903. If 1903 held, we could be short. That was the easiest trade to see. Everything was pointed to higher off the opening. We had P's in the overnight session. Bank of Japan's interest rate cut. Every stock market in the world was up. So the market's bias or structure came in for the long side, and that carried the market up to, I think, to about 1911. Right here. This was the first actual short trade sell-up, came right here, and then everything else we're just getting higher lows. And if you traded on the short side of the market, there's the next short that sets up. That's a loser. Here's another trade that sets up right here that is a loser. You got hurt. So all the money went to the long side. You can see it here in pane number 3. This is the only time that the red bars were taller, longer than the blue bars were all day long. And so it was an up day for obvious the Bank of Japan interest rate cut. End of the month window dressing. Today's fundamental news was mixed. Chicago PMI, manufacturing PMI, went from the lowest number they'd seen in a long time to the highest number they've seen in a long time in a 1 month swing. So hard to gauge. GDP came in lower than forecast, so the fundamentals weren't all that strong. And one of the easiest things to see when you trade is when bad news doesn't break a market, buy it. And there's your GDP news. It did start to trade down, then it snapped right back up. And so no matter what the news says and how strong your belief is, it's really hard to ignore the reality of what in the hell, or it should be very, very difficult for you to ignore the reality that the market is trading higher or trading lower, no matter what you think. Taking a look at today's F1 screen, higher, low, higher, high favors the buy side come Monday. When we look at the F2 screen, same thing. Double distribution higher, and we're going to close it strong. We do have news on Monday. We've got personal income. I don't have numbers for any of this. Personal spending. PMI manufacturing. ISM manufacturing. We'll have those for you Monday morning. And construction spending. And right now, based on the way the news is split, my guess is that personal income will come in as forecast. Personal spending maybe a little less. PMI, don't know, probably a little lower. ISM probably a little lower. Construction spending, that pretty much always misses its mark. So if the market were to close right now, we'd be selling failure to take out 25 to 30. We don't know where the close is, and it can certainly close stronger in a short squeeze. The next high volume number is at 33.50. So that 34.39 area would be sell 2. On the buy side, the breakout came from the 10 levels. So last rotate down was 16, so 10 to 15 if the market were to close right now would be buy 1. And then the buck to 05 would be buy 2. We do live in interesting times. In a way it's neat. Hard to be bored. Also hard to walk around not being aghast at what the hell's going on. It's hard to describe the chaos that's been created by lousy industrial tax policies around the globe and no leadership in foreign affairs. You know, if you think about it, everything can be talked about, everything can be guided, you can nudge people in the proper reaction, what diplomacy is, and that's what our establishment stands for, talking about it. they aren't worth a damn as talkers when you get right down to it. They can't. I mean, they couldn't. They're pretty pathetic when you get right down to it. Higher low, higher high. Obvious why the financials are higher today. The fundamental news was bad. The Bank of Japan cut their interest rates by treasuries. Pretty easy. And treasuries do trade the news. You don't have to second guess that. Got a P with volume very high in the distribution. That means a retest of today's highs and or higher prices come Globex or Monday. And if the market were to close right now, we'd be selling failure to take out 22, 24. And then 31 to 27 would be sell 2. On the buy side, last rotate down stopped at 13.5, 14.5. So our 9 to 13 would be buy 1, and buy 2 would be 1 to 5. Looking at the 30-year. Now, the 30-year is a little more interesting. The knob spread came in quite a bit today as players book profits. So knob spread selling took us down. So they're buying the 10-year and they're selling the 30-year, and that's what made for weakness here. Last rotate stopped at 9, then at 15, so an 11 to 15 sell. And 23, 27 for sell 2. The knob spread comes in even further. It's going to be easy to take it down. So 21. And we're where we were this morning. 29.01 buy 1, and we'll drop it way down. 13 to 16 buy 2. Okay, looking at gold, lower high, lower low, but still not breaking. This 1110 area plus or minus pretty good support. Wanted to buy 10 to 12 today. We definitely have a P right now. This market's trying to trade higher. You'd have to think it's probably the chaos going around the world. We wanted to buy 10s to 12s today. Last rotate stopped at 16, so we'll make 13 to 15 buy 1. And then buy 2 will be 9 to 11. And we're going to make 19 to 21 sell 1. And 24, 26 sell 2. Crude oil, definitely getting mixed signals out of OPEC and OPEC members and Russia. So my guess is it's damn near impossible to get an agreement out of OPEC because of all the varied interests, and only Saudi Arabia, Kuwait, Qatar, the bigger the Gulf states, the Persian Gulf states, can cut back on production and not impact their economies and their lavish lifestyles, and they're meddling overseas. That's changed. Everybody is negatively impacted. So who's got the deepest pockets? You'd have to guess Kuwait, Qatar and perhaps Saudi Arabia have the deepest pockets and can stand it the longest. So we're holding up pretty well considering what Iran said. That normally would take the market down quite a bit. So right now, inside day trading range is what we expect on Monday until we get a new piece of news. Right here on our profile, you got volume here, you got time there. Looking at the volume skewing. Leaning a little B inside the congestion area, but it's not overwhelmingly or decisively so. 33.75, 34, sell 1. 34 and a quarter, 34.50, sell 2. On the buy side, 33 and a quarter, buy 1. Got our inside numbers. One of them will come out, and then 32.25, 32.50, buy 2. I think the fundamentals say we should trade lower, given no agreement out of OPEC, and I don't see how. It's just been my experience, and I've been tracking this since 1985. It's just real hard to get a deal. And war, an external event, is usually what bails OPEC's rear end out. They can't do it amongst themselves. Okay, the euro's finally busted out to the downside. So we have all this support down here basically at 108. And we're at 847. And we got a pretty clean break right here at 88.90. So 109 plus, 108 minus market. Find a place to sell it to retest today's lows. There's your move out of the middle, and here's your break in the market at 61. Last rotate up to 8 period was 80. So we have this spill. 52, so 50 to 60, sell 1. I think it stops above that, and then 75 to 85, sell 2. 108 and a quarter, buy 1. 108 even, buy 2. Folks, that's it for the month of January and this week. I will see you bright and early Monday morning. I hope you all have a great weekend. It's supposed to be 65, 67. When I get outside this afternoon, I'm going to kind of piddle in the yard and fiddle around and enjoy the warm weather. Y'all have a great weekend, and bright and early Monday morning we'll kick it off again.